Well, welcome back, my friends. Okay, by now you probably have all heard the news about a possible 50-year home mortgage. All right, think about that for a minute. All right, folks, grab your calculators because while we're talking about something that's been popping up lately, the 50-year mortgage, yep, half a century. That's not just a mortgage, that's a relationship. You could pay this thing off, retire, and your grandkids might still get mail from your lender. But all jokes aside, let's break it down with the pros and the cons of a 50-year home mortgage. Hey, I am Annette Marble, your favorite key realty agent in and around Central Ohio, trying to keep you up to date with the times and what's going on. So, all right, pro one, lower monthly payments. The big attraction, smaller monthly payments. Stretching your loan out for 50 years means you're not shelling out as much each month, which may make home ownership more affordable in the short term, especially for today's prices. If you're trying to get your foot in the door, literally, this can help you qualify for a more expensive home or just free up some cash each month for other goals. Vacations at the beach. Okay, but, all right, think about that. Pro two, easier on your budget. Life happens, cars break down, kids join expensive travel teams. Mo decides he needs a gourmet gibble or get his leg fixed. A lower payment gives you more breathing room and when life decides to throw you some curveballs. Now, here comes the fine print. The cons. All right, you're going to pay a ton of interest. Here's the catch. Stretching a loan out, that means you pay interest until, well, let's say your knees creak. Well, mine are creaking. So you might end up paying double what your house really costs. So think smaller payments, but bigger overall price tags. Okay. Con two, slower equity growth. Building equity, it'll move slower than the DMV line. All right, con three, risks of being upside down. If the market dips, you could end up owing more than your home is actually worth. Think of 2008, 2009. So 50 years is a long time. Most people don't even stay in their house, the same house, for 30. Now think about that. If you got the seven-year itch, so chances are you're still sell or refinance way before that term is up, but you're thinking long-term investment strategy or planning to keep it for my forever home. It can make sense in specific situations. That's called being underwater, or unless you've got a scuba gear, it's not a fun place to be because your payments are so spread out. The earlier years, most goes towards your interest, not your principal. So if you decide to sell or refinance, let's say in 5 or 10 years, you might not have built up that much equity at all or period because you're still paying only a little bit towards your principal. So is a 50-year mortgage loan good or bad? You're going to have to decide. It really is going to depend on your situation at that time. So if you're thinking about buying or just want to talk your options through, let's chat before you sign up for a mortgage that outlives your Netflix password. I never remember mine. That depends on your goals, your finances, and how long you plan to stay put. Keep in mind, no one is always staying put for too long. And just remember, smaller payments feel good now, but the long-term cost can sting later. Ouch, ouch, ouch. I'm Annette Marble. I help you make smart moves in Central Ohio real estate. So let's just start one decade at a time. So don't forget to please like, subscribe, and comment your thoughts on this subject. That would be awesome. I'd love to hear from every single one of you. So as always, we're in and around Central Ohio and we're keeping it real here in real estate with Annette Marble and Associates.